The retail giant plans to close 3 of its US-based technology stores, asking hundreds of workers to relocate while retaining their jobs.
Are your favourite retail stores on the chopping block this fall? We'll discover the shocking truth behind the 10 iconic brands facing an uncertain future. Could this be a sign of retail collapse? Let's get into the detail. Number 10. Big Lots. Big Lots is a discount chain that sells various products from home decor to electronics. However, the retailer has announced that it will close some of its stores in 2023, mainly in urban and suburban areas of California and Colorado. Big Lots faces declining sales as inflation affects its low-income customers, who are less likely to buy non-essential items. The company reported a net loss of $87 million in the third quarter of 2022, compared to a loss of $4 million in the same period last year. The company also lowered its full-year guidance 2022, citing supply chain disruptions and higher freight costs as additional challenges. Big Lots is shifting its strategy to focus on opening more stores in small towns, where it faces less competition and has lower operating costs. The company plans to sell some of its store properties and close other underperforming stores. The company expects to return to a normal level of closures after 2023. Number 9. Bed Bath & Beyond. Bed Bath & Beyond is a home goods retailer that sells various products, from bedding and bath accessories to kitchenware and furniture. However, the company has struggled for years with declining sales, rising costs, and fierce competition. Bed Bath & Beyond has failed to adapt to changing consumer preferences and shopping habits. The company has been criticised for having cluttered and outdated stores, offering too many coupons and discounts, and lacking a clear brand identity. The company has also lost market share to online rivals like Amazon and Wayfair, and brick-and-mortar retailers like Target and Walmart, who have invested more in e-commerce, delivery, and curbside pickup services. Bed Bath & Beyond has faced financial difficulties due to the COVID-19 pandemic and its aftermath. The company had to temporarily close most of its stores in 2020, resulting in a significant loss of revenue. The company also had to deal with supply chain disruptions, higher freight costs, and inflation, which eroded its margins and profitability. Number 8. Tuesday Morning. Tuesday Morning is a discount retailer that sells home goods such as bedding, bath accessories, kitchen, and furniture. However, the company has announced that it will go out of business and close all of its stores in 2023. Tuesday Morning has failed to adapt to changing consumer preferences and shopping habits. The company reported a net loss of $87 million in the third quarter of 2022, compared to a loss of $4 million in the same period last year. Number 7. Children's Place. Children's Place hopes that closing some stores and restructuring its business will improve its cash flow, reduce debt, and focus on its most profitable locations and categories 12. The company also plans to revamp its product mix, launch new private brands, enhance its online platform and loyalty program, and hire new leadership. Children's Place has not been able to adapt to changing consumer preferences and shopping habits. The company has announced that it will close 100 stores by the end of 2023, mainly in urban and suburban areas of the US. Number 6. Amazon Go, Amazon Fresh. Amazon is a giant e-commerce company that has ventured into various businesses, including grocery retailing. However, the company has recently announced that it will close some of its Amazon Fresh and Amazon Go stores, which are its brands of supermarkets and convenience stores. Amazon is not satisfied with the customer response and differentiation of its Fresh and Go stores, which are supposed to offer a unique shopping experience with advanced technology and convenience. However, some critics say that the focus on tech rather than retail experience has put off shoppers, who do not trust the sensors that record their purchases or prefer more human interaction. Amazon CEO Andy Jassy said the company was experimenting with these stores to find a format that is differentiated from competitors and resonates with shoppers. Number 5. Party City. Party City is a party supplies retailer that plans to close or sell over 22 US stores by the year's end. Party City, the largest party supply store in the US, filed for bankruptcy on January 17, 2023, in the US Bankruptcy Court for the Southern District of Texas. The company is looking to restructure its debt and improve its financial situation. The RSA provides for cancelling nearly $1 billion of Party City's debt and issuing new equity to the note holders. The company expects to emerge from bankruptcy in the second quarter of 2023 with a leaner balance sheet and more optimised store portfolio. Number 4. Corner Bakery. Corner Bakery was sold to Pangaea Restaurant Growth Brands, a company owned by real estate investor and restaurant operator Jignesh Pandya. The deal was part of a strategic and financial partnership to support the next chapter of growth for Corner Bakery, which had been struggling with the impact of COVID-19 pandemic and the changing consumer preferences. Panjar Restaurant Growth Brands also owns Boston Market, which it acquired in April 2020, and sees opportunities for strategic alliances between the two brands. To restructure the debt and improve the company's cash flow by cancelling nearly $1 billion and issuing new equity to the note holders. Optimize the store portfolio by renegotiating many leases and exiting less productive locations while keeping most stores open and operating normally. To pursue new growth opportunities by opening new stores in more profitable locations and categories. Number 3, Nordstrom. The company filed for protection from its creditors this week under the Companies Creditors Arrangement Act, CCAA, a Canadian law that manages the orderly wind-down of businesses. The company expects to close all 13 stores in Canada by late June 2023. The company hopes to improve its cash flow, reduce its debt, and focus on its most profitable locations and categories in the US market. Canada is also closing dozens of locations in the United States after sales collapsed by 40%. In 2022, analysts predict the retailer will be under pressure in 2023, especially as another economic downturn begins and its profit margins are further squeezed by consumer recession. Number 2, Kirkland's. According to the web search results, Kirkland's Home, a specialty home decor and furnishing retailer, has announced that its president and CEO, Steve Woodward, retired. The company has not reported its sales performance for the first quarter of 2023 yet, but it has reported a significant decrease in sales for the fourth quarter of fiscal year 2022. The company's net sales for the fourth quarter of 2022 were $149.4 million, a decrease of 23.5% compared to $195.4 million in the same period last year. The company's net sales for the financial year 2022 were $484.4 million, a decrease of 19.9% compared to $605.0 million in the previous year. Number 1, Express. Express is a clothing retailer with over 500 stores in the United States and Puerto Rico. The brand targets young adults with its trendy and affordable fashion. Express is at the top of the list of retail experts who say the brand will likely become a casualty of the developing recession. Express relies heavily on mall traffic, which has been declining for years and severely affected by the pandemic. Express faces intense competition from online retailers, fast fashion brands, and off-price chains that offer similar or lower prices. Express has not been able to differentiate itself from its rivals or adapt to changing consumer preferences. Express has a high debt load and a negative cash flow, which limits its ability to invest in new initiatives, improve its operations, or weather the economic downturn. The company has been trying to cut costs, renegotiate leases, and raise capital, but these measures may not be enough to avoid bankruptcy. As We Wrap uncovered the 10 retail stores on the brink of closure this fall, can these businesses weather the storm, or is their fate sealed? Share your predictions in the comments below. Hit that like button if you like this eye-opening video, and subscribe for more industry insights. Stay tuned for our next update, and let's keep this conversation going.